All right, today's video we'll be going over how to get better entries. I'm gonna get straight to the point right here, and it's mainly gonna be for penny stocks. I'll go over options. There's not really much you can do with options sometimes, but they're obviously using limit orders. You will get the best entries. You never want to use market orders and options, but I'll explain that later. But penny stocks, right? So, have you ever watched a penny stock? Like, this is fun. And if we go to, I need to turn the indicator. I've gone over this in my classes before. If you guys did watch my other class, I went over this a little bit, but this is like a more separate video. So see how this volume candle is 5 million volume. At this point, if you're watching this live, this price is probably jumping from like 4.30 to 4.50 to 4.20. Like, it's probably jumping all over the place. And let me actually go to another example. So I played news the other day. If we look at news the other day, see all this volume, see how this volume is 5 million. This price on news was jumping all over the place. Like, it was going from like 5.15 to 5.45, 5.70, then back down to 5.35. And if you guys see, and this method only works with like stocks with a ton of volume and the price something like this. If you've ever seen like the candle and you're like, oh, this is a huge green candle, has a ton of volume, and immediately you just market buy because you don't want to miss the move. Have you ever done that and then immediately you're down? It's probably because you market buy at like 5.80 or like 5.90, and then it just drops down to 5.50 again. And how do I stop this? Well, if we look at news and we go to the daily, this chart doesn't have much history in the last like almost like year. I mean, it doesn't have much history at these levels, so it ended up passing 5. It doesn't have much history after the 5 level. So if we go to like right here, basically last March it was at this like 5-6 level, but after that it does not have any history at all. So I don't really see any major resistance points in the stock because there's probably not a bunch like huge sellers that like, I mean, maybe there's sellers that are bag holding from all the way over here that could stop this, but there's no really major history. And when I look at stocks like these, I always use the like 5, 6, 7 levels as support and resistance. So if you guys wondered how to use support and resistance on penny stocks to just randomly shoot up like this, I always use like the psychological levels, like 5, 6, 7, because they're respected pretty well. So say the stock has a lot of momentum, it just breaks 5, and then it's like at 550, 560 all of a sudden, and say you market buy, you want to get in right away. That is not a good way to do it, because if you market buy like 560, it's likely going to go back down to 5.50, because with stocks with like 5 million volume like this, every single 5 minutes, it jumps around so much. And if you guys watch the price, you've probably seen that. And if you market buy at 5.60, you get filled at 5.60, you can often be down like 30 cents right away. So what I do is, after it passes a certain psychological level, so say it passes 5, if we go to 5 right here, after it passes 5, even if it goes to 5.50, I'll put like a limit between like 5.10 and 5.30, anything 5.30 or less. Sometimes I'll just do 5.30. And if you notice how much the price is jumping, it often jumps down to like 4.30 or like the 0.30 or under range. And in this situation, we see it close over 5. And again, that's waiting for confirmation. As I said, we see close over 5, and then it very quickly wicks down to 4.68. So if it goes to 5, we see it go to 5, and then we see it go to 5.97, and it's literally rejected by the 6 level. And like I said, like I always use psychological resistance for like, I always use psychological levels for resistance on these stocks with like not a lot of history. So we see it rejected exactly by 6, and we see it drop back down to 4.78. So if you market bought, you could have gotten in at like 5.80, and then immediately you're already down. And it actually takes 10 minutes for it to go back up to that price and break through again. So what I do is I put a limit at like 5.30, 5.15, and very quickly we see it jump down back to that price for a second. And if you have a limit, you'll get filled at a better price. And say you put a limit like at 5.05, your stop loss could be like 4.90. And this is actually a bad example. It actually wicks down way under 5. That probably would have scared me out because I would have been down like 50 cents already. And that is not good, but you guys get the idea. So you want to put a limit at a lower price, especially when there's a lot of volume, because the price always jumps around. And if you put it at a lower price, that means your stop loss can be a little lower. and usually it won't hit your stop loss, especially if it has a lot of momentum. And getting a good entry is important in my opinion, because if you have a 10% automatic stop loss and you have a bad entry, it's likely going to hit that 10% stop loss, and maybe it goes like 12, 13% and then jumps right back up. But if you got a better entry, maybe you're down only 3%, and it bounces up from that 3% instead of 13% if you got a 10% better entry. So I always try to get good entries. They're really important, especially in these penny stocks with a lot of high volume. So like I said, if it breaks psychological resistance, so in this situation it breaks 5 and it goes to 5.80, I put my limit, like I try to get filled around 5.15, 5.30. And it's not the end of the world if you don't get filled. If it keeps going up and it doesn't ever go back to your fill, keep watching it, because if it breaks the next psychological resistance, like we see here, we see it break 6 right here, you can now put your limit at like 6.15. And as soon as it breaks 6, we see it go to 6.60. And you would put your limit at 6.30 or 6.15. So if you put your limit at 6.15, let's say 6.20 actually. If you put your limit at 6.20, we see it go up, and then it opens right here. It opens at 6.50. It goes down to the 6.820 level, finally fills it, and then it kind of consolidates a little bit and then jumps up. So if you don't get filled, it's not the end of the world. There's always other opportunities, and make sure you're watching for the next psychological break, because then you could just put your put your limit at like the 0.15 or 0.30, the next level. So like 5.15, 6.15, 7.15, and you get the idea. But make sure you're looking for a bunch of wicks. So we start seeing a ton of wicky candles here, and that represents weakness in my opinion. So that's why I didn't play it on the 7 break, because it didn't really, I saw all these wicks and I saw, see this volume right here. This is less volume than this right here. So, like, I'm going to go over volume in another video, but I didn't like that. So I didn't play this. I only played the 5 and 6 break. I actually closed, usually I always scale out before the next psychological resistance. So I entered at 530. That was my limit. And then I sold around 5.80 for a nice 50% gain, because it's before 6. And sometimes it gets rejected by the 6 level. And we literally see it right here. It gets rejected by 6 at first. Pretend this is candles in action. Pretend it didn't close like this. You would have seen it get rejected by 6, and then it knifes down the 4.60s, like in a matter of 5 minutes. So that would be really bad. And if you were actually in the situation, you'd be like, oh my God, it just dropped from 6 to almost more than $1 in 5 minutes. So that's just crazy. That's why you want to wait for the candle close. But I always scale around right before the next psychological resistance, because they serve as resistance. And thing I always tell people is scale out at resistance, because if it gets rejected by a resistance and you don't scale out, then it's going to be hardly rejected. You're not going to have to take profits. But if you do scale out at resistance and it does get rejected, at least you took some profits at the top. So it's very important to buy support and scale some resistance, and then hold runners in case it breaks resistance. And then if it breaks resistance, you could even add more. And then obviously keep moving your stop loss up. Pretty self-explanatory. So that is how I play these penny stocks with a lot of volume. I always use the 5, 6, 7 levels. I like to play like the 5, 6 breaks. Something you guys do need to know is on penny stocks, a lot of times when it breaks the 5 level, I usually expect it to go to 6 after that, because the $5 is a major level. It's more major than like 3 or 4, because it's in between 0 and 10, and 10 is double digits, and 5 is like the halfway in between point. So once we see the 5 break, I always look for a stock to continue, but obviously I make sure it still has good volume. That's just something you want to know. But that is how to get better entries. And let's go to how to get better entries for options just super quick. So if we go to like SPY, for SPY or like anything, any option related stuff, do not use market orders, because see this 2.30 and 2.96 ask and bid. If you use a market order here, you could literally get filled at like 2.96, like maybe, or even like 3. It just depends. Rather, if you use a limit order, like at you put a limit order like at 2.5, you have a better chance of getting filled at a better price. And if you say you do put a limit order at 2.5, and you don't get filled, you can move it up to like 2.51, 2.52 until you get filled. And oftentimes you will get filled under the ask price, especially on these tighter, like on these big spread options. If it is an option that's like 1.01 apart, it doesn't really matter. Like if you use a market on here, you'll probably get filled at 0.52 or 0.51. If SPY is like popping and there's a ton of volume, there's a huge green candle like this, sometimes I will use market orders because every time I put the limit always goes up and then I never get filled. But with options that have a wider spread, never use a market order because you could literally be screwed and instantly you'll be down. So that's already bad entry itself. So if you want to get good entry for options, make sure you guys are using limit orders. Again, do not use market orders for options. Unless you're like more experienced and you know that, and the spread is really tight and it has a lot of momentum, blah blah blah. So that's just something to keep in mind. And other than that, that's all I have for now. Maybe I'll do a video in the future, but that is literally like everything I just explained to you is everything I know about how to get better entries. Maybe there's other ways that I don't know about, but waiting for confirmation is big. Using limit orders for options is big, and using limit orders for shares is big, especially if the price is jumping down from like 6 to 5 in like a second. So hopefully this helped. Make sure to use my Webull referral code. Like this video, turn on notifications, comment, do all that stuff. You're probably annoyed at me saying that, but it really truly helps. And other than that, peace out.